Mark, I suppose oil prices are the very visible sign, or energy prices generally, the very visible sign of tensions ebbing away from this market, down 5% on the Brent price right now. I guess the question is how quickly we get to these lower levels, and is there anything to stop oil prices retreating to where they were before the 13th of June?
I think, good morning, Anna. I think if this ceasefire holds and we don't have another major flare-up, I think oil prices are going a lot lower again in the coming weeks. I think we're going to get back down to probably below $60 very, very quickly. You've got to remember that the macro backdrop going into this was the idea of just excess supply out there and a slightly more concerning demand outlook. Then we suddenly got a big flare-up on the Middle East conflict, which is now disappearing. But we also need to remove the risk premium that was in the price because of Iran's nuclear program, nuclear ambitions, and that ongoing tension. Now that those nuclear ambitions have been set back potentially by years, there should be a much lower risk premium in the oil prices. So expect oil prices to head significantly lower in the coming weeks, and with it probably the dollar too, because what we've seen is the dollar and oil have become much more heavily correlated in recent weeks as people really trade on that idea that the US is the world's largest crude producer and most resilient to a world of higher energy prices. And the other flip side, it is probably least the smallest beneficiary of oil prices really collapsing.
Do lower oil prices mean lower rates? Does it mean lower inflation? Can Powell cut?
I think lower oil prices absolutely mean lowest inflation. I mean, it is the most important commodity in the world. It is the commodity that is the primary cost for extracting every other commodity in terms of the cost of extraction, production and distribution. Oil prices are still just absolutely dominant as a macro input. So lower oil prices is good for central banks around the world in terms of being able to keep rates more limited. Does it work alone to allow Powell to lower rates? No, probably not. And I think there's still too much uncertainty around trade and what's going to happen there. And of course, the fiscal side. And I think it's going to be a really tense couple of days as Powell is kind of interrogated by congressional committees, because he can't commit to rate cuts as much as everyone wants, and he can't say that rates should be much lower, but he has to allow for the option that there's a potential he'll be cutting rates very aggressively later on, just not quite yet.
Well, Mark, if we're going back to the pre-Iran crisis levels in terms of oil, perhaps even in terms of the narrative around equities, why is the bond market catching a bid this morning? What's the thinking for rates traders?
I think in the short term, the comments overnight from a couple of Fed officials saying that they're open to a July cut is leaving traders bet on the idea that Powell will kind of validate those comments at the meeting this week. I think they're surprised those comments came out ahead of the congressional testimony, and there's a presumption that there's some alignment and then therefore they know what Powell's going to say. So I think that's the bet in the short term, and I think there's a risk that they get disappointed. From there, lower oil prices do help yields come lower in the short term. But I expect that yields might be higher again later on this week. But obviously there's big risk either way around the Powell congressional testimony.